right, check mic 1, 2. Ramis Fakori here at the IRA Club Vice President, joined with Ryan from the Spartan Investment Group, Mr. Gibson.
Thank you, sir. Well, thanks everybody for joining. You know, right now I think what's on everybody's mind is the economy's a little uncertain. As Maverick here says, the yield curve is inverted, and as you know, that means that the short-term investing is paying more than long-term investing. That's basically all that means. And typically, a yield curve is, when you hear that, it means that the longer you have your money tied up in like a CD or something, the more that it's going to pay. But right now, you get more benefit for having a short-term investment, like in just sitting and saving. So that's usually a sign that there's bumpy air ahead, or there's a kind of bumpy water ahead in the economy. A lot of confusing things happening though, like war and geopolitical issues and interest rates rising and all kinds of uncertainty. It's really hard to find cash flow in this environment, and it's really hard to make bets on certain things. But self-storage really has been one of those asset classes that over the last 30 years has performed better than any other asset class, or actually really since for about 40 years. And you can see the stock market crash in 1987, when markets cratered over 30%. Storage occupancy did really well. In 2000, when we had the dot-com burst, it again performed exceptionally well. The Great Recession, the Great Financial Crisis of 2008, and then obviously COVID, even before the infusion of capital that the government came and put in to the economy, self-storage was doing exceptionally well. In fact, self-storage was 82% returns from the publicly traded REITs during COVID-19 pandemic, and led the way through COVID. And I'm going to get into why here in a second. But, you're probably wondering, like, who uses self-storage? We talked about the small unit that you use, and kind of, I'll go into how I thought this was kind of a stupid asset class, to be honest, when I first got into it. But then I ended up using it because I had a life event. But this is who uses self-storage. Our top 2 customers are Gen X and millennials. So despite, millennials wanting more experiences and things like that, millennials and Gen X are what our top customer demographic is. And they really kind of stick around. And you can see the reason why Gen Z is not using a lot of storage, and why greatest and silent generations and why and baby boomers are sort of dropping off, is because they're not having as many life events. The people that are having life events right now are millennials and Gen X, because they're moving, they're downsizing, they're relocating, they're growing their families, they're moving their parents, whatever it might be, where Gen Z isn't really doing a whole lot of that yet, right? They're still living with parents. They're still kind of getting settled into their careers. So this is utilization of self-storage over time. And you can see that since 2013, there has been an uptick in the number of households that are using self-storage. So now in 2022, 11.13% of households are using self-storage. So it has been a industry that is gathering more and more and more and more people that use it. And that's because it's becoming more mainstay. It's on every corner. People use it. People know it exists. They know when they move, they can rely on it. It's just becoming more of a staple in our day-to-day retail use. But why do I like it? Well, I like it because the fact that there's no toilets. I think we have 30,000 units and like 9 toilets in our entire portfolio. We don't have to have leasing agents at our property. We can do everything fully automated. We don't care what kind of appliances we have to buy, because there are no appliances in any of the units. We save all that capital expenditures. We don't even have any water heaters, and we don't have to we're not susceptible to eviction notices. And I'm going to talk about that in a second, but we don't have to evict people. We have a lien against their belongings, and we have the auction process that protects us in both blue states and red states. We can have somebody out of our unit. And lastly, my favorite is this picture of this trashed apartment. When people move out, we don't have that. We have a corrugated walls and a box, right, that we sweep out. So we don't have to deal with tenant renovations and tenant turnovers and things like that. But I think the most powerful thing about self-storage is actually the lease. This is the second line in a self-storage lease. Stored property and a subject is subject to lien in favor of the owner, right? In favor of the owner. So basically, if you don't pay, we can put a lien on your stuff, and we can sell it if payment hasn't been received by the owner. And we can do that in 30 days. This is directly from our leases. in our self-storage units. What lease in commercial real estate or any real estate allows you to do that in a blue state or even a red state? So the other thing that we have is if the occupant fails to pay, we have the right to shut access off to the facility, meaning that if you don't pay after 3 days, automatically our system will turn off your access to the property. So you can't even get into your unit after paying for 3 days. And the funny example I like to give with this is imagine if you were renting out your multifamily property and your tenant stopped paying and you wouldn't put a little lock on the door and said, hey, sorry, you can't get into your house until you pay me your rent, right? You probably end up on the 5 o'clock news, right? And if you kicked them out after 30 days and sold all their stuff, you'd probably end up in jail, right? In most states and so most markets. So this is really a wild asset class in that. We're also not responsible for any damage whatsoever to belongings in the unit. That's even if the roof leaks or somebody breaks in and steals it, or there's some kind of neglect, it's not our problem. It's you're putting your stuff there at your own risk. And you can't make any alterations to the unit. You can't, hang hooks or do anything like that whatsoever to the storage space. So really, you just physically are just getting a box. So what's the kind of units that we have? This is a typical 5x5 at a facility we built. Beautiful corrugated metal walls and a nice polished concrete floor there. This is a typical 5x10, beautiful corrugated steel and a concrete floor. And this is a beautiful 10x10. Okay, so you sort of get the drift. They're all kind of the same, right? There is no variation to these units. There is no complicated construction to these units. It's very easy to build these. It's just a little bit different. Now we have 10x10s are our most common units, and 10x15s are pretty much our staple in the industry. We also have a 10x20. But I was an investor. I'll get into my background in a little bit, but I was an investor in single family turnkey rentals. Bane of my existence. I know it works really well for a lot of people, a lot of my friends in this space. But I was sold a turnkey rental, and I love the concept of buying these single family homes and somebody else manages them. But I gotta be honest with you guys, it went really, really terrible. A tenant moved out in October, and then I didn't get another tenant in there until February. And this is actually my house that I sold, 4939 Farnhurst Road in Cleveland, Ohio. And it took 6 months to find a tenant in the middle of the winter. I really didn't like that. And it was $2,500 in repairs when the tenant moved out, because I had to make all these changes, change the carpet, paint the trim, whatever it was. And, that after I finally got a new tenant in there, a year went by and my property management company called me and they said, hey, do you want to raise the rent? I'm like, no, I'm scared to death. I'm going to lose my tenant. And if I lose my tenant, I'm going to go 6 months with no rent. I'm going to lose all my revenue. Then I'm going to have to turn them over and pay, tenant, fee. Forget about it. I don't want to raise my rent on this property. And in storage, the reality is it's like, is someone going to move if you raise the rent $10 a month on their unit? And imagine doing that over 500 units. Our typical facility size is 550 units. So if I raise rent on 550 units, $10 a month, I mean, very, very quick math here. That's $5,500 a month. That's $66,000 a year at a 6 cap. That's $1 million swing in valuation just by raising the rents $10 a month. So again, is someone going to hire a moving van, come to the property, move all their stuff, move it across town? It's probably going to cost them $200 to do that, and that plus their time. Not going to move $10 a month. So a little bit about our company. We're actually the fastest. Rated by Inc. magazine. We're the fastest growing storage company in the last 4 years in a row. These are a picture of some of my team. Our headquarters is in Golden, Colorado. My office is actually in Seattle. Last year, we were the 4th fastest private growing real estate company in America, and we were the 126th fastest growing overall. And we're the 40th largest operator and owner of self-storage in America. So we operate our facilities under Free Up Storage. So if you go to freeupstorage.com, that's our brand that we put on all of our properties. We own the brand. We all the employees in our property operations are all Spartan employees, but we operate under the Free Up Storage national brand. This is where we operate. We're in about 11 states right now, soon to add a couple of states in our portfolio. We're actually looking at Alaska right now, which is kind of cool, and a couple other states. such as Alabama, but we've got about 30,000 units. We have about 130 employees now. We've raised from, IRA investors and regular cash investors. We've raised over $250 million, and we have about 600 million assets under management. That's all pretty much self-storage, couple things mixed in there. And we've been on the Inc. and the Vet 100 list for the last 3 years, actually 4 years. But just a little bit about me, how did I get into this space? How did I start Spartan? I actually am a pilot. That's my background, and learned how to fly. That's actually the picture on the top there is the day that I took an airplane up and fell in love with aviation and went on to go fly for the airlines professionally. I was an international pilot, flew the 76, 75, 73. And actually now I have a passive income pilots podcast where I bring on aviators that also got into real estate investing or just investing in general. So if you want to check that out, it's pretty cool. But, I went through the whole Robert Kiyosaki, fell in love with real estate, fell in love with investing, and really just wanted to become a business owner and an investor and really have my money start to work for me so I could do all the things that I love, which is my kids, my family, and skiing, rowing, flying, doing all kinds of stuff. This is actually a few pictures. Bottom left there is our investors come out with us. We host a ski trip every year. This year we're going to Park City, but anybody who's invested with us is invited. And those are some of our investors that went on the trip last year. Total blast. And then just some of the things I like to do with the kids in the winter. But it wouldn't be possible if it wasn't for my passive investments and active investments in self-storage. But where it started, it was actually in our nation's capital. Spartan Investment Group started at that house right in the middle. And I actually lived in the White House to the left, and I was an airline pilot. And one day a guy was walking down the street, military guy with his wife, and I convinced him to buy the house 2 doors down from me, and we started Spartan Investment Group together. So Scott Lewis is an Army vet, and he moved in, and then our first flip for Spartan was actually the house in the middle. So our first house was in our nation's capital. That's actually in Capitol Hill. And we flipped the house, and then we ended up flipping like 4 houses on that block. And we started in residential development and just absolutely hated it. Just a lot of work. And we said, what can we do? What asset class is the best? And we looked at self-storage as something that was recession resistant, easy to own, easy to evict, easy to maintain. So the 3 E's is what led us to build Spartan. And now we're a vertically integrated company. We build self-storage for people. We build our own self-storages. We buy existing self-storages, and we do all the operations. So everything from find the property, find the debt. We syndicate the equity from both non-accredited and accredited investors. Our minimums are $50,000. And then we run the property. We do everything. And then we do distributions to our investors on a monthly basis. And then we share in the upside. And we also do like property tours and let our investors come by our properties. Very open book with that. But Scott and I really aligned on one thing when we started Spartan, which was we wanted to have thorough, well-vetted investment opportunities. And we wanted to follow a checklist, kind of Scott's strategy and my really strong checklist-driven approach from the airlines. We actually developed a 700 plus point due diligence checklist. I share that with everybody. So if you want to scan that QR code on the screen, you can download our checklist, and you can see everything that we do when we put a property through due diligence. And it's applicable to most commercial real estate. And, if you jump on that list, we're actually writing a book right now on our due diligence process, and we'll share that with you when it comes out. But typically what we do, we find properties we can build and properties we can buy. So that property right there, Cumberland Storage on the left, that's actually one of the facilities we purchased. That was an old roller skating rink that was converted into self-storage, kind of fun. And that property we bought existing, that's in Tyler, Texas. And the top 2 properties there to the right, Class A facilities in Wisconsin that we purchased. And then the bottom 2 pictures are actually, that's a facility we built just here, just outside of Seattle. So those are kind of our typical deals that we buy, Class A stuff. And then this is some Class B and C vintage property that we bought. Again, existing properties that we fix up, we raise the NOI, and that's how we provide great results to our investors. We also build from the ground up. So this is a property we built. We took this vacant piece of land here, and we built this nice Class A property. This is just outside, about 35 minutes southeast of Portland, Oregon. And then once we build the property, we put the free up storage national brand standards in place and really kind of institutionalize the investment, and we take it through its lease up. This is the case study I'm going to talk about today. This is a property that we bought that existed, about 80,000 square feet. And then we actually took this 2 acres here, right here on the screen, and we added 240 units. And then we leased those units up and added about $3 million worth of value to the property. So we have a construction company that builds all these units. So we have that's the team out there. And then we do the marketing and branding and promotion to lease up the property. So a lot of stuff like that. But let's talk about storage. Let's give you guys, the why, where it's at, the state of the industry on self-storage. So there's more self-storage in the United States than fast food chains, which is wild. There's actually about 50,000 fast food chains, about 60,000 self-storage facilities. And what's incredible, as we talked about earlier, is that and I actually edited this slide before the deck because it actually was 1 in every 10 Americans uses a self-storage, but now it's actually every 1 in 9 Americans uses a self-storage. So it's actually increasing as a utilization as people. And so, and I think what's incredible is that 66% of people that actually use a self-storage also have a garage. So when you think about, well, they wouldn't use self-storage because they have this big garage. Most of our customers are actually have a garage as well. And so out of the 330 million Americans, there's about 33 million Americans that use self-storage, which means we have a ton of scale and a lot of runway in this space. But the reason why people use self-storage, and normally when I'm in a room, I can say, hey, show of hands, who's used a self-storage? And almost every room or every hand in the room goes up. And I asked people, I say, well, why did you use self-storage? And they say, moving, job relocation, my mom downsized, somebody passed away, death, divorce, whatever it might be. And that's all life events. So people don't realize that, people are using this stuff because they're moving, they're shaking, they're happening, something's happening in their life. And, I like to tell my personal self-storage story where I was using self-storage. I thought self-storage was kind of silly because this was just kind of like what my apartment looked like. My wife and I were first married. And then we had kids, and then it kind of looked like this. It wasn't as fun anymore. The toys, the clutter, the things like that. So we said, hey, we're going to renovate our house and we're going to expand the back of our house. We're going to renovate our basement. We're going to make all these upgrades to the house because of our kids. And so once we kicked off the renovation, we're like, well, we need to put our stuff in self-storage. And so when you think about the personal life event that I had in self-storage, it really kind of clicked with me all of a sudden. I was like, you know what? This makes a lot of sense. But that's not the only reason that people use self-storage. 30% of our customers are actually business owners. This is a staging company using us. They use self-storage. We have food distributors, sheet metal contractors, Etsy and Amazon business owners. We have the Chamber of Commerce that rents units all the time, Little League baseball teams, et cetera, that use self-storage. It's just commercial use as well. And it's kind of like a subscription service where it's really hard. It's really easy to sign up and really kind of hard to cancel. And, it's kind of like a gym membership, right? Like when you sign up for a gym membership and you try to cancel it, there's like a guilt trip. You got to notarize something or go there and talk to them in person. They kind of guilt you out of it. But self-storage is even worse. I mean, imagine you go to cancel your unit, you've got to move all your stuff out of your unit and then cancel it, right? So there's a lot of friction that goes involved. We have a very sticky tenant base, and our average stay typically is about 30 months in our portfolio. So people move in and they stay there for quite a while. But how does it compare? How does it compare to multifamily, single family rentals? How does self-storage compare? And I think everybody gets in this space because of the tax advantages, right? Bonus depreciation, cost segregation. You can use your self-directed IRA, whatever it might be. There's tax advantages to it. And self-storage is no different. We get all those things. Average stay, across the board, average stay isn't all that much better. I think the average stay in self-storage is probably a little bit better than multifamily and single family rentals. Being at 30 months, I think the average stay in multifamily is like maybe 18 months or 16 months, but don't quote me on that. Someone else might have a better stat on that. But really, the economies of scale, same as multifamily, we have about a 500 to 700 units under one rooftop or one property. So you can scale this very easily. Not very easy to do that in single family. But where we blow the doors off every other asset class is automation. We can fully automate a property to where we don't have to talk or interact with anybody. We can do rent recapture, which means if somebody doesn't pay, we can do the auction process, get our money back within 30 days. And we have low maintenance, meaning that we don't have the water heaters, the appliances, the countertops, the renovations, the carpets, everything that goes into a multifamily building, you know? So we have really good benefits there. So you might be wondering, okay, so if you don't have any like kitchens to remodel or paint to put on walls, how do you add value to a self-storage unit and increase the facility's value at the end of the day? And I'll kind of walk through an example. Our typical property that we buy at Spartan has what's called ECRIs, existing customer rent increase potential. So that basically means that when we buy a property, let's just say this unit here is being rented out for $30 a month. But we look at a property and we study the market and we see that, you know, hey, all of our competitors are charging $60 a month for that same unit type. So we buy the property because we know that there's a $30 per month increase on every unit. There's 500 units, right? So we know that we can increase rent substantially. So when we buy the property, we'll raise the rents maybe to $50 a month. And maybe the customer moves out and they say, you know, I just, it's not worth it anymore. Well, we can have somebody move in at $60 a month. And now instead of it being like having one unit for $30 a month, now it's like we have 2 units, right? So it's like we're buying property at a substantial discount and its potential to raise rents and really bring the property up to value. And the best part is we didn't do anything to the property. All we did was raise the rents and change the lease. And sophisticated operations helps that, right? Because we can better market. We do 24-hour rentals, we do online rentals, we do call center, we do all these things that help tenants find us and identify our property. We also add value to the facility significantly by increasing the signage, curb appeal, landscaping. This is just some of our properties that we put on the side of the road. You know, we can make a nice monument sign, we can paint the building, really just make the property look nice so people want to move in. And the other thing that we do is we look for these diamonds in the rough where you walk into the office and maybe it looks something like this, where there's, you know, cats and smells and air conditionings, you know, hanging out of the windows. And it just doesn't give a good experience for our customers, right? So what we do is we come in, we'll do an office renovation and make the customer have the confidence to know that they're at a safe and secure site and they want to book a property with us. And this is just some of the things that we do too: fencing, lighting, better latches, better locking mechanisms that makes the customer go, hey, I know my stuff is in good hands when I'm here. And that really is what drives more customers coming to our property and better returns for our investors. We also get out there in the community, do things like ribbon cuttings. You know, we meet with the mayor, we do parades. We get involved in the local community. Like we've done like trail cleaning events, and our employees really embrace that in the communities that we invest in. And then we actually have a number of ways to add additional income to our property, like U-Haul rentals. We sell tenant insurance. We sell merchandise and things like that. And I'll kind of go over some of the other ways that we make money, but there's a multiple of different ways that we can use self-storage properties to make additional income. And then once we fix up the property, raise the rents, get all the NOI, make the operation better, well, then we exit, right? And if you have read the Wall Street Journal at all in the last 3 months, institutional investors are flocking to this space. Pension funds, endowments, sovereign wealth funds, Extra Space just bought Life Storage, Public Storage just bought Simply Self Storage. 2 years ago, Blackstone bought Simply Self Storage to run as its brand and just sold it for a $600 million profit. So when you think about our positioning in the market at Spartan, what we're doing is we're going out and buying all these little mom and pops, right? So that's Spartan in the middle. We're kind of this medium-sized fish, right? And we're going after these mom and pops that haven't really operated their facilities very well. They haven't done the rent increases. They haven't done the marketing. They don't have call centers or websites or online bookings or sophisticated operations, really. And they're tired. They just don't want to own the property more. And 70% of the ownership of self-storage in the United States right now is mom and pop. So the opportunities are out there. And so we get gobbled up and sell properties to the bigger dogs in the industry, right? We're the 40th largest, but the other 39 sophisticated operators are here. There's tons of them, public storage, life storage, so on and so forth. And we're selling properties. Actually, we sold 3 properties just in the last 3 months to one of the companies that are listed here that are the more larger institutional buyers that know that we're going out there and finding good property. And then we can sell it to the larger operators. And we have scale. So it's not just like, oh, well, anybody can go out there and buy some random property in some random market. We have well-located facilities and we cluster them together to provide operational efficiency on payroll, on marketing, travel, things like that, which increases our returns by having those economies of scale. And then it also provides better returns to our investors. And you can see on the red dots on the screen, that's where we've clustered a lot of our properties. We have our largest footprint here in Texas and in Georgia. So that's kind of where we do. We have a lot of our facilities, and that's because there's good population growth in a lot of those markets. But getting back to the property that I talked about earlier, the single family, it's like, when my tenant moved out, that's all your revenue gone, right? There is no alternative way to make money. You have a single family home, your tenant moves, boom, there's no revenue coming in, and a tenant doesn't pay for a few months. That pretty much going to wipe out your profit for the whole year. And what I love about self-storage is there's 5 other sources of income that you can make in addition to the storage rental income. The first one I love the most, tenant insurance. We actually sell tenant insurance to our customers for $13 or $15 a month, or $13 or $18 a month. So imagine 550 units. The day we take over, we offer our tenant insurance plan to our customers, and then also require that a tenant insurance policy is in place. We sell that and we get that revenue and we share that with our investors. So we're adding tens of thousands of dollars a month in income to the property at a low cost of goods sold right away when we take over a property by selling tenant insurance. That's incredible. That's an incredible revenue source. We also have merchandise sales, boat and RV storage. It's wildly popular right now. We have truck rentals. This is one of our trucks that we rent out. And we also add things like cell phone towers, where we can get a triple net lease from a cell phone company provider, which is fantastic. But enough of that. I'm going to wrap things up with a case study. So I'm going to show you a real property that we bought and sold, and how our investors benefited it, and all the things that we did to kind of prepare and position this property for success. This is like I call this like a vanilla ice cream deal. This is a typical Spartan deal. This is a Tuesday at my job, right? This is a kind of a classic deal that we do. So this was a $6 million property that we bought, came with $440,000 of NOI. That means that how much profit the facility was making. And we bought it at a 7.38% cap rate, which doesn't exist today, but still kind of the cap rates of yesteryear. And we bought this in April of 2019. Sometimes these properties come with random businesses associated with, like we had a car wash that came with this property. We had some land to expand, and then we had a U-Haul truck rental business, which is really cool. Here's a video of it. So 11 buildings. We had about 735 units of storage, about 80,000 square feet. That's our typical, that's a right down the fairway property for us. And what's interesting about this property is it had interior climate controlled units, about 50% of them, and had outside units as well. But it came with this car wash. We actually sold the car wash. We separately parceled it and sold it off to a guy that runs car washes. Not our thing. Made a really nice profit on it. And we had U-Haul rental trucks on site. But like I said earlier, the reason why we like this property is because it came with this 2 acres of expansion. So we actually went out there and added 240 units, or about 40,000 square feet, which increased our profits and increased our returns and gave the facility a huge valuation bump by adding those additional units. And this is our construction team moving and shaking out there. You can see that it rained, quite a bit. And then we took the property through its lease up. And so how we did that was we raised $2.3 million from equity investors. So we had IRA investors in there, we had cash investors in there, and we actually had this deal. This deal was open to non-accredited investors. And then we went to the bank next door and got $5.2 million of debt. So in all, we had about $7.5 million to play with. And what did we do with it? Well, we spent it on buying the facility. We spent $1 million to expand it. We put some money in reserves, and then we had some closing costs for the property. Then we did some due diligence on the facility. And again, if you want to learn about our due diligence process, schedule a call with us, and we'll take you through what we do on properties. So that's the phone QR code is the due diligence process. That's to get on our calendar. And then the QR code above there is just to get the due diligence checklist. And we go through things like we look at the rent roll, we look at the P&L, which is just basically all the financials that go into the property. And then we do a market study where we actually go knock on all the doors of all of our competitors to kind of figure out what's going on in the market. And guys, this is probably the number one thing you can do is your market study. And what you want to look for is, hey, are the rents lower at the facility that I'm buying than the rest of the market? And can I add value by raising rents? And so you can see here, our market study determined we could do that. And we found a gap between what our facility was charging and what the market was charging for rent. And we, when we did that, was, it's a lengthy process. Our team, we have one person on our team who literally this is all they do. And so this is 5x10s. This is called the rent roll. And you can see all the people charging $47 a month for a 5x10. There's 67 people. And we looked at all these other people that weren't paying $67 or $47. And we went unit by unit by unit by unit and found that there was $165,000 per year gap between what the market was charging and what we could charge. So if you think about that, that's how you get value, how you add value to a property. So what we did was we said, you know what? We want to be conservative with our investors. So we're only going to say $72,000, and we're going to give ourselves 18 months to raise these rents to market. Even though we could turn them around in 60 days, we're going to do 18 months. And that would add about $6,000 a month in cash flow, or about $1 million in value at a 6.6% cap rate. And then we wanted to look at the site. We wanted to see, hey, how much can we build? And our civil engineer said, hey, you can build 40,000 square feet. And we're like, well, let's be conservative. Let's say we're only going to do 20,000, which back in 2019, this cost you about $50 a foot. Now it's about $80 a foot, unfortunately, thanks to COVID and metal and all that. And we said, we're going to give ourselves 24 months to build it. We were newer at the time. Now we can build something like this in about 4 months. So it doesn't really take that much. And then we gave ourselves 15 months to lease it up. Because remember, when you build something, you're not going to have all these customers on your first day. That added about $2.34 million of value. And then we did all these other things that we talked about. We fixed up the property, we increased the customers' rents, we expanded the property, and we basically added some ancillary income like tenant insurance. For those cash investors, we do bonus depreciation and cost segregation. This is the actual K1 that flowed off this property. And the bottom line here is an investor that put in 50 grand, they got about a $21,745 loss in the first year, which is super cool. When you look at the cash flow from this investment, our investors cash flowed between 7 and 10% per annum over the 5-year hold that we had this property, which is great. And when you think about the tax breaks that you get from bonus depreciation, it pretty much shields your taxable income for that time period because of bonus depreciation. Now, if you're an IRA investor, you don't really need this stuff, right? Because you've got a tax deferred vehicle, which is why we love IRA investing, right? But if you're a cash investor, I wanted to throw this out there as part of the case study. So wrapping this up, what happened? Well, we proposed raising the rent $72,000 a year. We actually raised them $205,000 a year. So huge rental increase, way over our projections, which is great. We proposed adding 20,000 square feet, or about $155K a year in income, but we actually went forward with 40,000, and we increased our rents 300 grand a year, which is amazing. And then we had the existing NOI when we bought the property. So we told our investors, hey, we're going to sell this property for $10 million, basically $10.2 million over a 5-year hold. We just wrapped up the sale, and we sold it for $14.4 million. Our investors got a 44% annualized rate of return in this investment for the 4-year hold. So like a 2.9x. So they did incredibly well. So before I get to questions, I got a little bit of time for that. This is what we talked about. We talked about why it's recession resistant, how, and that's death, divorce, downsizing, aging, relocation, things like that. how Spartan can benefit self-storage investors, how we can offer basically passive investment opportunities, our due diligence process, happy to share that with people, who uses self-storage, some of the tax advantages, and then basically wrapped up with a case study. So if you wanted to talk more about with our team about this, you can, that email QR code is our intake form. And then that phone number or that phone QR code is how you get on a call with us.
Thanks again for everybody joining us. Until next time, Ryan, we'll talk soon, buddy. Be safe.
Thanks. Take care.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.